Hello there. This is Raphael, certified Main Street Tax Pro advisor, also participant in 2026 annual filing season program with the IRS, with 20 years of experience helping small business owners to increase their personal cash flow, save money on taxes, and retire early. I wanted to make this quick video throughout the day here due to the fact that I just got done with meeting with a client. And it was pretty interesting because this is a business owner. They're starting their business, second year in business. Second year is not very long when you're starting business. You kind of really want to prove yourself and be in business for about 5 years before you can say that, yeah, I think I know what I'm doing. But anyway, they're just basically starting. They're coming to me because they want me to do their business and personal tax return. And as we're talking, I'm realizing that they actually had a pretty good year. They had bookkeeping, but they were not very close to what the books were saying. They didn't really understand that showing a profit in the business actually means paying taxes. And it's a good thing to pay taxes. I think that the IRS is kind of like a silent partner. They make sure that everybody's playing fair, that there's opportunities in the market. So when I say helping small business owners to save money in taxes, I said in the legal way. There are several things in the tax code that allow you to minimize your tax liability and not to be in trouble. But that's aside the point here. My point was that this business owner right now realized that they have a huge bill coming up. And by the way, this bill was done last year in 2025. They needed to pay that back then. And they didn't quite understand what estimated tax payments actually meant. And what estimated tax payments means is, as you're a business owner and you're getting money from your business, they're not deductions. They're not federal income tax reduction. There's no FICA deduction. That's Social Security, Medicare, and unemployment taxes. So you're basically getting a whole bunch of money every month in your checking account. And you might think that, yeah, I get to keep the whole thing. And that's not true. To kind of keep it in a very simplistic way, you're a business owner and your business is giving you money, right? You might want to figure it out in a quarter how much you got out of the business. And kind of to be in a safe range, you might want to take 20% of that and send it to the IRS as an estimated tax payment for the year. And you want to be doing that quarterly because you don't want to get to April 15 the next year and then realize, oh my goodness, I don't have the money to pay that big bill. Because yeah, life gets on the way, money's coming in. Some people have to pay rent, mortgage, auto insurance, whatever you call it, and the money gets spent. And if at least you do this on a quarterly basis where you take 20% of what your business is giving you and you're sending it to the IRS, you're walking into April 15 with more of a feeling that things are taken care of. I'm speaking in a very simplistic way. I'm just using 20% as a rule. But in reality, you might want to have a real relationship with a tax accountant in which they're looking at your books quarterly. They are presenting consulting services for you. And that's what you really want. So you don't want a transactional tax accountant where you come and they just tell you how much you need to pay and now you're trying to figure it out. This whole how much I need to pay in April, that answer was already done last year. That's what we call tax planning. So if you are ready for a real relationship with a real tax accountant with over 20 years of experience among several industries, reach out to us. I'll be more than glad to help.